Look, I think the first point I'd make is that I think there's enough money to get going in the system, going around to do a bit of everything. What we're arguing is less that these companies take money out of their R&D budgets or their CapEx budgets, but rather perhaps take it out of their dividend budget. So it's more about how do you want to distribute cash to shareholders going forward? Do you want to pay a big chunky dividend, or do you want to pay maybe a more moderate dividend and top that up with a buyback? So our argument is around how the payout ratio is going to shift in terms of what percentage of cash returns to shareholders come from dividends and what percentage come from buybacks. We're not at this stage advocating that companies take money out of their investment programs. It's just sort of reshuffling things a little bit in terms of how they distribute cash.
And why have European companies historically favored dividends over share buybacks?
I think it's sort of a cultural aspect, and historically, and there may have been some tax advantages to that as well, particularly in the UK. And it's quite different in the US, where traditionally the tax status actually has traditionally favored buybacks. We've not had that in Europe. So over this long legacy, cultural effect has meant that European companies have predominantly used dividends. But our work showed, and going back to our report in 2019, that companies or shares with high dividend yields were no longer being rewarded by investors. Actually, high dividend yield shares were underperforming. So our argument is that companies can pay out a little bit less in terms of dividends, put a bit more into buybacks. And what does that give you? It gives you, one, a little bit more EPS growth because your share count comes down year on year. And then secondly, it actually creates a little bit of sort of persistent bid in the market for your equity. And what we've actually shown in the report is that European companies who do buybacks tend to outperform a lot more than US companies who do buybacks. So we think it's good for shareholders and it's good for the company in terms of putting some upward pressure on their share prices.
Well, in terms of what it means for share prices, I mean, looking at flows, Europe actually hasn't seen material inflows year to date, but other parts of the world have. The US, even parts of EM have seen inflows. Do you think if we do see European corporates move more toward buybacks, this could be a catalyst for those flows coming into the region?
I think so, yes. I mean, when we talk with US investors over the years, one of their concerns about reallocating money to Europe is this lack of buyback activity. Many investors view it as a sign of sort of shareholder-friendly activity. So they're not that interested in these big dividends, but they do get more interested if corporates are starting to change their behavior. And we think they would look at this shift in terms of more buybacks as a sign that the European boards are thinking more carefully about how to try and create value for their shareholders. So yes, I think you're right. I think that if we do see this uptick in buybacks, it definitely is sort of opens the door a little bit further, should we say, for global investors to put money back into Europe.